There are two types of student loans: private student loans and then federal student loans. First, with private loans, you don't qualify for a lot of the loan forgiveness programs that are only for federal loans. And that's because those loans are through the banks, and the government has no control to force the banks to change the programs. In general, you would have had someone co-sign for the loan, or you qualified, which means that you have assets on your own, versus federal loans where you probably didn't have assets to qualify, and so the government is backing you, and that's why the government is providing all of these loan forgiveness programs. With private loans, be sure to contact your lender. They may be able to consolidate and reduce your payment, or create a graduated payment so that you make lower payments now that go up later, or reduce the debt. You can also try outside consolidation again, as explained for the credit cards. Bankruptcy is an option as well, especially if you have very large private debt. If you are interested in looking into bankruptcy, be sure to contact a lawyer who's familiar with student loan bankruptcy. They are forgiving some debts in bankruptcy court, as the lenders have not been fighting the bankruptcy from people who are very much underwater. For the federal loans, there are two types: FFEL and direct loans. Depending on which type of loan you had, depends on which program you qualify for. FFEL loans were in place up until the 90s and continued up until about 2010. Direct loans started during the 90s and continued through then. So depending on when you took out your loan would depend on what type of loan you have. Now there are only direct loans if you have federal loans. So if you're taking loans now, you definitely have direct. The IBR program is one of the loan forgiveness programs that is for both FFEL and direct loans. So that's one I recommend looking into. Basically, all of your discretionary income, which is your income above the poverty amount for your state, you will never pay more than 15% of that discretionary income. And that amount decreases based on the number of children and dependents you have in your family. Pay as you earn is another program for direct loan holders. And you may have heard of the Public Service Loan Forgiveness Program. That program operates a little bit differently than every other program. And basically you have to work in public service sector for 10 years. But the public service sector is not actually explicitly defined. Instead, it's defined by your employer. So you have to work for 10 years in the public service sector as long as your employer considered you public service. In general, if that was for a nonprofit or a government organization, you would qualify. Or health. It's loan forgiveness. They forgive the loans entirely, but you apply for the program after you've completed your 10 years and you submit documentation from each employer. For all of these loans, and there are a lot more loan forgiveness programs as well, you can contact whoever you make your loan payments to. They always usually have this information online as well, and the application process is very simple from my experiences.